Is Ahold Delhaize a buy after the latest earnings report? Let's find out. Welcome to the channel. I'm the Swedish dividend investor, and today we will do a valuation on Ahold Delhaize. Ticker AD on the Amsterdam Exchange and ADRNY on the New York Stock Exchange. I will be butchering the name, so from here on I will not say Ahold Delhaize, just call it AD. Before we begin, this is not financial advice. I'm just a guy on YouTube who wants to help people think differently about investing. Make sure to read the full disclaimer in the description down below. So let's begin with a quick overview of the business. AD operates a multi-brand, omni-channel retail business model focused on food retail and e-commerce. It owns supermarket chains, convenience stores, and online grocery platforms across Europe, the USA, and Indonesia. The company generates revenue through brick and mortar stores, digital grocery services, private label products, and loyalty programs. It also emphasizes cost efficiency, data-driven personalization, and sustainability initiatives to enhance customers' experience and profitability. Additionally, AD leverages scale advantages and supply chain optimization to maintain competitive pricing and strong margins. AD released their 2024 earnings report, so we will check the numbers out and do a valuation. I'll be right back when I have filled in the spreadsheet, and then we can take a look at the numbers. So just a quick glance at the numbers tell us the revenue was up slightly, almost 1%, and net income went down almost 6% from last year. They have taken on slightly more long-term debt, and the short-term debt jumped up 3 billion euros. We can see the shares decreased a little, and looking at the free cash flow, it went down with around 100 million euros. Keep in mind, AD did stellar during the high inflation period, so of course we're going to use a 5-year average for the valuation. Looking at the net income and free cash flow, we're a bit higher now to maybe compared to a normalized year of 2020. Looking to the right, we can see some short info. They hiked their dividend for 2025 by 6.4%. And they also have a very low payout ratio to both cash flows and net income. About 26% for the cash flow and just under 60% for the net income. The free cash flow has grown with around 3 to 5% annually, and the earnings is about 5% per year. Their 5-year average free cash flow yield is around 11% currently. Compare that to the S&Ps of around 2.5% during August of 2024. Their earnings yield using the 5-year average is 6%. Let's look at the charts for a better overview of how everything is looking. Somewhat steady cash flows between 2020 and 2024. It did have some growth. Revenue increasing along with net income. Looking at the balance sheet, we can see they have a pretty decent chunk of cash, 6.1 billion euros. That could cover their long-term debt in an instant. The short-term debt rising with 3 billion is something to keep in mind. Moving over to my overview list, we can see it has a lot of yes. The first no is the coverage of the debt. If they hadn't used short-term borrowings during 2024, the debt would be covered. However, as we can see on the line above, their 5-year average free cash flow for 5 years could easily pay it off, so I wouldn't be too worried about the debt. All in all, I think it looks pretty decent. Before we do the valuation, do you own AD? Let me know in the comments. So, let's do a valuation. Starting with the free cash flow valuation. Now, we can see the free cash flow multiple here, around 8.4. I get this number by dividing the market cap with the 5-year average free cash flow. So, to even it out, and for a margin of safety, let's put 8 as a terminal value for the normal case, 10 for the best case if the market starts to value it higher, and 5 for the worst case. Now, for the growth rates. AD did expect headwinds for 2025. So let's be a bit careful. We will go with 1% for the first 3 years for the normal case, then 3% growth for the 7 years to come. For the best case, let's say they increase their cash flow with 2% the first 3 years and then 5%. For the worst case, we will go with a negative 2% for the first 3 years and then 1% for the remaining 7 years. I would say probability 50, 20, 30, and that gives us a present value of 37.36 billion euros or 35.49 billion euros for a margin of safety of 5%. Moving over to the dividend, we will use a terminal multiple of 28 or around 3.57% for the normal case, 30 or 3.33% for the best case, and 25 for a 4% yield at year 10 for the worst case. Dividend growth of 5% for all the years on the normal case, 6% on the best case, and 0 for the first 3 years and 2% for the remaining years on the worst case. I would say probability 50, 25, 25, giving us a present value of 27.53 euros per share or 26.16 euros per share with a 5% margin of safety. Last but not least, the earnings valuation. Terminal multiple of 15 for the normal case, 20 for the best case, and 10 for the worst case. We're going to use the same growth rates as the free cash flow valuation, since they have been somewhat in line with each other. I would say the same probability, 50, 20, 30, giving us a present value of 26.55 billion euros or 25.23 billion euros with a 5% margin of safety. So, looking at the main page, we can see it's a bit overvalued, with the exception being the free cash flow. We see very decent payout ratios and a pretty good free cash flow margin considering the sector. Looking at the mixed valuation, we can see a fair price for a 10% return is between 29 euros per share and 27.5 euros per share if we want a little bit of margin of safety. Changing the discount rate to 8%, we can see it's in line with today's price per share, maybe even a bit lower. So if you buy now, you could expect a return of around 7%. I would rather wait until the price comes down to around 27-28 euros per share. There is a lot of things I like about this company. I like the stable sector, food stores. But there is always some cyclicality with foods. Sometimes we have great years, sometimes we have bad years. I think the market always prices in too much in good times, and the market is way too pessimistic in bad times. I bought into the company in November of 2023 at around 27 euros per share, mostly because of their cash flows, but also their dividend. They spent 1 billion euros on buybacks in 2024, and during at least half of the year, the stock was fairly priced. I'm holding, but I'm not buying at these levels. Alright, I hope you found this video helpful. Make sure to leave a like and consider supporting me by subscribing. It helps a lot. With that said, I'm the Swedish dividend investor and I will see you in the next one. Ha det gött!